Yeah, so we can okay, welcome everyone. Good afternoon. We'll start. Okay, so welcome. Good afternoon. Today lesson will good afternoon. Today lesson will go through LO2, learning outcome 2. Be able to assess the impact of relevant taxes in a given situation. So we'll look, various scenarios and how we can assess. So it depends again, the finance sector. So we had a discussion in the previous lesson, popular people chat in office ethics. We discussed parent, subsidiary, and associate company. What is meant by how we can, if to 20 to 49%, we can call associate if you own the shares. If more than 50%, it's your subsidiary, and if the parent own more than 50%, that's parent, and other company will be subsidiary. So we had a discussion, if we own the shares of other company less than 20%, we can say is a simple investment. Okay, so we already had a discussion. So always good to scale 1 to 10. You can reflect how much we know about tax return. Of course, you're all dealing, most of you, so it's no issues really. Okay, so indicative content. Today lesson, our overall discussion will cover the way, the personal and the business outcome learning to the different tax consequences, which will go through comparison of alternative scenarios, which we can look around individual as well incorporated businesses and advantages and disadvantages, different course of action that can be overall our discussion will cover. Okay, so we already had a discussion. We can look around finance sector. We can look around the rates and we'll address according to the rates. Okay, so we know personal allowance 12,500, 12,570, and so on. It's carry on changing. Look around which year you want to use the finance sector, whichever you're dealing. Okay, so these are all the finance act rates accordingly, and we'll go through annual allowance, pension allowance, and various other schemes will be in our discussion, which we'll go through. Yes, benefit in kind, and today is 2.1, which is assessment criteria 2.1 about apply the taxes to the given situation. So we can look around how we can apply these taxes in given situation. It can be any example of because you can look around employment income, saving income, property income, all and you can decide how you can calculate how much will be tax in that particular given situation in that case. As we discussed tax planning legal in the previous lesson. Okay, so component, total income, net income, and taxable amount. Yes, taxable income, which we can, personal allowance. Of course, we know 12,500 according to the act which you are using, but latest can be higher. Of course, we look around according to every year's finance act, whichever we are dealing, because it's not your exam-based course, so it's fine, whichever example you quote. Okay, non-saving, of course, we can look around the income or tax rate, we have exactly the same sort of, so employment income, non-saving income. Okay, so let's look this example, please. So we have the tax year 2021, Joe has salary 46,500, saving income 20,000, dividend income 6,000 during the year, and he paid the interest 300, which was qualifying purposes, and Joe employer deduct 6,800 in pay as you earn. So the income tax payable to Joe, which we can look around. Any question?
Yeah,
Please.
are you in the wrong screen? We can only see the apply taxes to the given situation. I think you're probably reading the next page.
Oh, sorry. Oh, what? Just one second. Can you see
I
now?
think you read, yeah, yes, exactly. It's better now.
Okay. Sorry about that. Thank you. Thanks for. So this we can look around, in this situation. So this is salary, then saving income, dividend income, how much tax being paid, total tax liability or outstanding liability, which we can calculate. Okay, so we can non-saving, which is employment 46,500, saving income 2,000, dividend income 6,000. So total income is 54,500. So interest paid, personal allowance we have, according to the scenario, we have 12,500 in the year. So we can, yeah, we can look around 33,700 is the income. Personal allowance normally is good to be state, claim from one source of income, which is employment income we can state. Yes, so 33,700 is the net income we have. Then the saving income 2,000, 6,000, and 41,700. So we have to pay the tax. So you already know how the brackets work. Yes, which we'll look at the next slide. So first, so 33,700, 20% tax in the year. Yes, which is Finance Act 2021, according to her income, and we can look around 20%. And then next, if you have a saving income, if you fall in the low tax bracket, not high taxpayer, then of course, we can look around accordingly. So up to 500 is exempt. In that case, we can look around back in the rates column. And then, so that's a 37,500 will be 20% tax. And rest, which we can look around because the saving 500 is exempt. So we have a 2,000 minus 500, remaining will be 20%. So that's there. And then 4,000 dividend income, because its overall income is fall in, yes, basic tax brain, and we can look around 32.5. Yes, so because that's, falls in the higher income brackets, which we'll go through in a minute. I'll show you. And that's, which we'll say the tax liability was 8,340 pounds. How much been paid already at source, and how much is tax need to be further paid. Joe is the higher taxpayer in the saving income, is a nil band, is 500, and the tax, the dividend is a nil rate. So the use, the basic rates band, which is 37,500 is the base. So 33,700, and we look the saving income, and overall, we can look around what the tax liability, how much being paid. So if I'll take you back to the rates, so that will help us to look around. So we know in the year, yes, so base is 37,500, 20%, and personal allowance, and we can look around, yes, so is a higher wall above than that is a 40%. And the dividend, if you fall in the bracket, so 32.5%. So income was higher. So first, we look around 37,500 was the rate. And after that, the above rate applies. So which was on the dividend 32 point other. So otherwise, if the low rate, yes, if fall in the basic rate, then is a 7.5% on the dividend. Any question? We all okay, because I think most of you working and you're very well aware of course, nowadays, of course, electronic calculator always carry on updating these things and the rates. Okay, then we have 2.2. We can look around advantage, disadvantage in different course of action. So we have two, we can look around this example, donor entries are the married couple. So we have a regular income, as we can look around the salaries, and we have both salaries earning interest and the dividend income. So it's a clear from the above information, Donald is higher rate taxpayer with the taxable income is 47,500. So 47,500 after the 12,500. So on other side is the basic taxpayer, because her income overall falls 18, 12, yes, 9 even you do, and minus 12, so it's 16,500. So in this situation, it would normally be case that the tax planning purposes, it would be advisable to see the investment income could be moved from higher rate taxpayer to the basic taxpayer, which is 3. So husband and wife can be transfer these around, and that will help, to reduce the tax bill overall. Okay, so which will look in this scenario. So introduction, the nil rate band, we already know, which is, yes, example of the saving achieved first 500 of interest income could be made by, and therefore use the saving income nil band 500 currently being vested in that case. That can be, so the income is tax 20% on, so saving income in the excess rate nil to 1000. Yes, so we can look around 2000 minus 1000, so it's 200 pounds supposed to pay the tax. If she transfer 500 to her husband, so he would use his nil rate on the saving income. Yes, because he falls in the higher bracket, so that's, instead of 1000 can claim 500. The remaining 500 will be 20%. And the second transfer would be the sufficient share to move 2000 of dividend income from Teresa to, well, in order to both may use their dividend income nil rate band up to 2000. Yes. So that can be up to 2000 dividend income can be nil rate. Okay, so this way we can look around the tax planning, and we can give the advice to the client you already well aware of, because we're working in accounts and doing some tax elements. If not, we can further look around according to the scenario and the rates, which is normally will carry on following accordingly. Okay, 2.3, assess the statutory obligation imposed, in a given situation, including the implication of non-compliance. If you don't comply, yes, failing due date, the tax return on the 31st January, we know what will be 3 months notice, and on 31st October, end of the tax year, the maximum penalty delivering the return after the due date is initial penalty is £100. Return more than 3 months late is £10 per day, maximum 90 days, and then 5% tax due, minimum 300. Yes, the rate can be, and more than 12 months late. Return more than 12 months late, it can be 100% tax due deliberately and concealed, 70% tax due if the deliberately but not concealed, 5% tax due otherwise, minimum 300 each these cases. So carelessness, so which can be, so these are can be penalties. So we can look around the advance, and we can according to those years and whatever the rates and the penalties rates were. So carelessness, deliberately errors, arrangement, concealed, deliberately error, arrangement, which we can look around, and maximum, and what will be minimum. So we can advise to the clients, and we need to be well aware of, we not, and it can become under fraud as well, which we need to be deliberately things we do. Okay, so penalties, of course, carry on. It can be, so careless, we just mentioned. It can be unprompted disclosures, prompt disclosures, yeah. So that can be deliberately but not concealed, 70%, 20%, 35%, deliberately 100%, yes, 30% and 50%. These can be penalties amount on return. Okay, record must, yes, in general be kept until later 5 years after the 31st January following tax year, concerned with the taxpayer in the business, yes, had the rental income, or 1 year after the 31st January following tax year. Otherwise, failure to keep record could, leads to the penalty of 3,000 for each tax year concerned. So that's huge. We need to payment of the tax must be made on the 31st January and the following 31st July, and the final payment in the income tax must be paid on 31st January following tax year. If we don't do it after that, the interest rate will apply. Okay, so that can be, we can look around the liabilities, suffered sources, and various other sources. We can look around, falls which category and the liabilities according to the finance act, which is whichever you use it. Okay, so interest and the late payments, we know it's can be not more than 5 months after the uh, penalty date is a 5% unpaid tax. More than 5 months, but not more than 11 months after the penalty date is tax, and more than 11 months after the penalty date is 15% unpaid tax. It can be, so this is all the rules really. It can be carry on chaining, so it's a matter of pursuing. But our assignment purposes, we can look around and we can add example from the book which is provided, or we can look around some example from ACCA articles on these taxations example. Non-compliance may be result in the fine, litigations, or other consequences to the client. So it's better to be keeping record, yes, guiding to, and of course, we know the five professional code of ethics as much we can. Of course, tax planning is illegal. Of course, we can. Professional accountant who encounter and made aware of the matter, there is a clearly in and shall are judged, by the nature and their impact. I use the professional judgment, ask, the documents, evidence. We know, the statements bank can be. And 2.1, when we assess the effect of the taxation on the financial decision made by individual or the business, your business may become affected by the sector tax, which is mean, important to ensure the comply with the sector tax obligation, as well as there may be opportunity to reduce the tax cost. We can look around, of course, the capital allowance and all, that will help. So in which category your asset falls and things implies don't often need to be spend a lot of time thinking about the tax and national insurance, as this is directly deducted from their monthly salaries. And however, running own businesses is very different. It's important that you take the responsibility for paying the correct amount of the tax, your business profit in line with the national insurance contribution. Corporation tax, or the business tax, is charged on the profit a company make. Corporation tax is similar income tax, but the company's meaning soon your business start making profit, it's need to be start paying corporation tax at the correct rate. And the business taxations affect business costs. For example, rise the corporation tax has the same effect on the increase the cost, which can lead to the raise the price with the businesses. And we can look around the tax include environmental taxes and all levies on the bills and the VAT, which is, of course, we know which VAT categories you fall and you choose. So annual different accounting scheme, we can use it. Annual accounting under the VAT, value added tax 135,000, excluding VAT. If your turnover, you can take the annual accounting tax return. So we can look around under this, the scheme you can, and they must leave the scheme if the tax over turnover is 1.6. So we can't stay more than if your turnover increase. So we have to leave the scheme. So that's, these are all, of course, is the advantages and disadvantages of different schemes. We can look around. Of course, one return payments spread evenly throughout most of the years. The monitor supplies to ensure the turnover limit is not exceed. That's, disadvantage. You have regular do it, because otherwise you can't. Cash accounting scheme, which is we can join, is almost the same limit. So it means only you pay the VAT if you receive or make the payments. Yes. So that is quite good. The bad debts can be automatically adjusted. So useful when the long period of credit given to the customer, automatically bad debt relief can be claimed. Otherwise, we have to claim. Okay, so flat rate, of course, we know flat rate can be, we can choose the scheme is 150,000. If your turnover, you can choose the scheme and you can stay on the scheme until 230,000, including VAT, your turnover. If is so, it's a simplified administrations. So one rate is can leads to the less, the VAT payable and discount 1% given the first year of the registration. Is carry on changing, please, again, if we need to look around which year we are talking about. Okay, so
Can
then,
Anju, can I ask you a question on the annual and cash? You said it's the same limit. So how do you choose which one to go? I know
Okay.
there is a benefit on going on cash for automatic
Yes,
debt
and
relief.
annual is mean one return. The cash you
Mhm.
can do cash and annual together.
I see. Okay.
So it's
They're
benefit
not
of
mutually exclusive. You can
uh,
do it together.
yes, you can do together.
I see. Okay. That makes sense.
Okay, so achieving the personal and the business, yes, so we can look around, uh, which is a D distinction criteria, and we can add, some example to look around. And the company must, normally file corporation tax return by due dates, yes, which is later 12 months after the end of the accounting period, 3 months after the notice requiring the return was issued. In inquiries, of course, we can do all these, accordingly and according to the Finance Act, which carry on looking 31st January, 30th April, 31st July, 31st October. Yes, following these are the dates, which we can company must, file online late filing return as for individuals, and penalties for errors as for individuals can be exactly for. And the payment of the tax due, yes, larger company must pay corporation tax can be in installment. Other companies must pay corporation tax 9 months and 1 day after the end of accounting period. So quarterly installment can be, yes, 12 months. These are all arrangement according to that can be month 7th, 10th period, and 1 to 4th following periods. Yes, in these days, and the rules we need to be look around accordingly. Depends, so augmented profit above the limits. So we can look around all the taxable total profit plus dividend received from the UK companies, ignore the dividend related to 51% group companies. So because other laws apply as group or subsidiaries or transfer pricing and things, which we need to be look around accordingly. And the upper limits, yes, multiple by months, and 12 is a shorter accounting period. Yes, divided by the number of related 51% group companies and so on. So example, because of course, if we look, the further in the business tax elements as well, that can be a separate, so where we more businesses and the rules we can follow and we can proportion, and the upper limit or lower limit and marginal relief, for the company is big, so can be. Research and development, yes, small and the medium size, yes, less than 500 employees, and either turnover is 100 million, balance sheet is 86 million, spending on research and development, yes, and 230% relief if the relief is create and increase the losses, on losses for the research and development credits and things, which we can, and some, we need to be capped accordingly, which we can further. Okay, another is IR 35. We know a lot of changes happen on these. The company must, normally corporation tax return on the due date, which is later than 12 months at the end of the period, 3 months, as we discussed earlier, in the small and the larger company, and the IR 35 rules, which we can look around. Basis period 3 scenario can be commencement of the trade, yes, assessed, using the opening year rules. Ongoing businesses assessed on 12 months accounting period in the tax year. And if you cease your business, assess the using the closing year rules. So these rules we can look around opening years, first year, in which the business just start, and assess the profit from the date of the commence following, uh, 5th of April, and the second year see the flow chart, which is according to we can flow it. Yes, so opening year's rules to if the accounting period ending in the tax year. So yes, 12 months long, no assess the actual, the basis of the 6th and 5th. Is it less than or greater than? So we can do the proportion and do the treatments accordingly. So opening year rules, yes, third years assess, the 12 months on the accounting date of the third years, and we can look around and we make the adjustment of overlap profits. Yes, same profit twice. These are known as overlap profit and the relief, for our lab profits if we closing the business. Finally, the year in which actually see the trades, yes, the profit not previously assessed less any other lab profit. So these are some rules we can look around according to. So in our assignment, when we pick example and we will include it to look around this learning outcome. The company taxable total profit arrived by aggregating of the various source of income which we can tax: trading, interest, other incomes, property incomes, chargeable gains, total profit less qualifying charities, donation which we can, and the taxable total profit how much we have. So interest, we know if we yes, interest income is non-trading source minus interest payable on the trading. It can be loans, so loans we can uh, the expenses we can make adjustment accordingly, and the property business income, all the property, a lot of changes happen in the property business, especially if your property is on under the companies. It's different rule than individual, and you will not expect it to complete the properties business income in the business tax, but may be expected to include in the income arriving the taxable total profit. Okay, accounting period, we know all an accounting period can never exceed the 12 months if the company prepare the accounts for period exceeding 12 months. This period account must be split into two accounting periods, yes, as we can proportion for the tax purposes as well. Trading income, yes, the time proportion amount before the capital allowance, and we can look around the capital allowance separately for each period, and interest income allocated to the period in which so property income and other income, time proportion gains, we can look around again accordingly. Qualifying charities, those are we can do the proportion rates. That was the previous rate, it's reduced to the 19, and which we can look around in different whichever the years you're looking. Opening years, yes, base periods and things, and adjustment we need to be make accordingly. So overlap profit, as we earlier we had a discussion, we can look around the first year as second year. So these are some examples, so we can when we'll do assignments, so we can make sure we can go through. So when we'll do assignment discussion in the lesson, which we can look around with these, how we can include them for. And please, if you want to look around some examples on these, so here is the link for further reading, or I can find you can find yourself any topic whichever. So is ACC article is quite good to look around some taxation or advanced taxation issues, and those for because of course it's not your exam, it's assignment based, so it's a matter of including example reference, and in this way we can meet our assessment criteria. Okay, that's all from my end. Anybody, any question, please?
Just the general one. Are you going to share these slides or are you not going to share?
No, it's I can share with you. These are available on Moodle, but I can share with you via chat in a minute now. So just 1 second. I can share with you. I can share with you the book as well. So where these examples came from. So just takes 1 minute. I can share with you. Why not? I'm just sharing. Sorry, it's a bit taking time. Can share with you all. So I'm sharing with you some article which I was referring. Uh, can share with you all the bit and pieces here. Okay, so I share with you all, these, and I can share with you 1 minute. ACC F6 book. You want to look around some examples. Um,
So these examples are coming from ACCA textbook
yes, so
F6.
yes, F6, I am just sharing with you the book, and
Okay, I see.
so this one I'm sharing with you F6 book and the answers book. So any question we can, you want to look around, some example how the calculations work. So there are plenty of examples. Yes, those quite good to look around. Yes, I shared with you. So please, you can download from the chat.
All right.
Where do we see that? What you shared?
In the chat box, when you click, yes, click on the top, yes, you can
Yeah.
download. If you click the chat, and when I'm chatting here, it's coming you feel like I'm saying hi, you can see, yes, my messages, and you will see the files as well.
I can't.
You can't?
Maybe
No,
we need
I can see
to.
share screen summary, companion record reaction, apps, whiteboard, notes.
Yes,
If you
so
go to the right,
shared
okay, go on.
shared files, yes. No?
Mm-mm.
Okay, no problem. What I'll do, I'm sharing with you on the WhatsApp group.
Okay, thank you.
So that's, I think, so will be easier for you if you can download from the WhatsApp group. Yes, so I'll share with you soon for these, and I just need to matter of login on my WhatsApp on the laptop, and then I'll share with you. State come in your group. So you all in a group, na? Yes.
Yes.
Okay, that's then quite good, so I can share by WhatsApp. Let's guys, sorry, I'm trying to share. Come on, why not showing group? Can anyone chat in the group? Just say hi in a group. Yes, on the WhatsApp group. I don't know why not showing me the group. You taxation. Oh yes, I found it. In few minutes will be in the, on WhatsApp group. Okay. Here is the book which I just shared with you. So hope you will find now. Can you? On WhatsApp. It may be open in a minute with your. Yes, can you? Can you see now, please? Hello?
Yes,
So,
man, I can see. I took a download from the Zoom chat, but
yes,
I can see your.
yes, it's on WhatsApp group as well.
Yeah,
So
I can
in
see it
case,
on WhatsApp group.
so in case if you can't from here, you can from there. So otherwise, all these available should be on our Moodle page as well.
Yeah, no, I can see it on the shared.
Okay. So, okay, so rest I'll share with you. Yes, I shared with you all the slides now. So these come to you. Okay, thanks for attending today's session. If you have any question, you can ask. Otherwise, I'll see you next week. Then have a lovely weekend.
All right,
Thank you.
cheers,
Thank you.
bye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye-bye. Thanks. Thank you.